Millennials, Alex here with another episode of Millennial Money. Today I get to sit down with the Rich Dad advisor, Tom Wheelwright, and he is the main reason why Robert Kiyosaki pays zero in taxes. And he shares with us how you can avoid giving the government an interest-free loan. Tom, I'm really happy to be here with you.
It's always good to be with you, Alex. It's
Oh,
great.
Thank you. I met him in Chile, and he taught me a bunch about accounting. And so he's basically the international authority on tax. And I just love learning from you, Tom.
Well, it's always fun to be with millennials. I love millennials. My partner is a millennial. Most of my employees are millennials, and I think they get a bad rap. I love them.
Yeah. And so I'm excited for today because this topic is really about the tax refunds. And I think there's a bunch of confusion about it, especially for millennials, because taxes isn't a very sexy topic. And so
What?
yeah, it's a little hard to grasp. And so I think people run away from it. And today specifically, I actually want to dive into when the Tax Cuts and Jobs Act was passed in 2017 by Trump. And I think he got a lot of bad rep from the media. And I want you to tell us exactly what this meant for maybe our viewers, millennials, and who maybe it benefited.
So, first of all, this has to be like the worst political marketing ever, right? To actually cut taxes and get hammered for it. I mean, who does that? It's got to be the first time in history that a tax cut was a bad thing. And what happened is that, you know, the Republicans thought, well, we want people to feel the effect right away. And so instead of saying we're going to get you a bigger refund next April, we're going to give you a little bit more in your paycheck right now. Well, the problem is that the little bit more wasn't enough more, that people actually noticed it. So it was like, you know, $15 or $30 or $50. But if you take $50 a paycheck over a year, that's like easily $1,200 or more. And so had they, instead of not changed, what they did was, of course, this is withholding, right? So every time you get a paycheck, a portion of it is taken out for taxes, because the government actually wants you to pay taxes as you go. They don't want to wait until the end of the year to get your money. So if you get it, you know, the first thing you look at when you get that first paycheck is, what's this withholding? How come I get such a smaller check? I thought I was getting paid this much, and I'm really only getting this much because the difference is taxes. And what happened was they changed the amount of withholding, which was a little bit amount on a monthly basis or on a paycheck basis, but over a year it actually was pretty significant. So what happened is that people had more money during the year and got a smaller refund at the end of the year.
And because for a lot of viewers, I think smaller refund, people get upset. And so I kind of want to talk about why maybe it could be a good thing and what they could do with their money with their check. Because I get the refund is smaller, but it's basically also a interest-free loan for the government if it's larger.
That's really what's happening is they're taking that money out of your paycheck every single month. Wouldn't you rather have that money to invest, to do something with, and not have to pay the government until you file your tax return? That's what we used to have, right? And now it's so you really you're giving the government an interest-free loan. Well, may not be that noticeable, you know, when that interest-free loan is, you know, a few dollars every paycheck. But as you make more and more money, as millennials, their income goes up, they see a bigger and bigger chunk, because not only is it more because there's more of a paycheck, but it's more because your tax rate actually goes up the more money you make. So it's actually a bigger and bigger piece of your paycheck. Well, wouldn't you rather be using your money rather than giving it over to the government and then getting it back a year later with no interest whatsoever? And that's the idea. I mean, you know, good tax planning, you should be able to really say, well, my withholding is exactly what the actual tax is going to be, and never a lot more.
And so what you're suggesting is basically, hey, it might be a smaller refund, but use that extra money that you get in your paycheck to start investing.
Right. So for example, I mean, let's say it's only $20, right, per paycheck. Well, you can buy an ounce of silver for $20. So that means that every paycheck you could go out and buy that ounce of silver and instead of giving the money to the government. Why wouldn't you want to do that?
Yeah, and that's even what Robert and Kim have discussed too, because you can start by a little bit, investing a little bit into gold, silver, whatever it may be, and then get interested in it, and that you're basically investing in your financial education to then later invest in something that's real property.
Exactly. Think about this. Let's say you took that little extra in your paycheck, and that extra in your paycheck always went to an investment. Over a year, 2 years, 3 years, 5 years, that's gonna grow significantly. And if you're investing it instead of just putting it into savings, of course, now you're actually gonna make some money on it.
So what's something millennials can do to reduce their taxes?
So here's the thing. Millennials, what you guys are great at is starting businesses, because you understand that you can start a business on your phone. You can start a business with your laptop. I mean, it's so easy to start a new business. And the government, the first thing to remember is that the tax law is really a series of incentives. It's the government wants you to do certain things, and they'll reward you if you do what the government wants done. So for example, the government wants people to invest in low-income housing real estate. Let's say they want to build housing for people that don't make very much money. Well, the government has a tax credit for that. That's a tax benefit. Or let's say the government wants people to go to school. Well, then their parents get a tax credit for sending them to college, right? I mean, we know about that. One of the biggest tax benefit of all, though, is starting a business. So think about this. You're paying rent or you're paying a mortgage. And if you're paying a mortgage, you're probably getting a little bit of a deduction for your interest. But if you're paying rent, you're getting nothing for that. But let's say you started a business and you took one of the rooms. Let's say you have a little space that you can carve out for a home office, and you do your business in that home office, then a portion of your rent can be deductible.
Wow.
I mean, that's like free money. So why wouldn't you do that? If you do that, it actually has an effect on a lot of other things too, because if a portion of your home is deductible, frequently also a portion of your car becomes deductible. And remember that we're taxed on our income minus our deductions. So income minus deductions, and we're not taxed on our gross income, it's minus deductions. The problem with most employees is they have no deductions.
Yeah.
Right? So as a business owner, you have all sorts of deductions because any money that you legitimately put into that business is deductible. So, you know, you're basically taking money that's not deductible, making it deductible. We like to say if you want to change your tax, you need to change your facts. And that's just a really easy one to do.
And I loved what you said earlier too, because it's like, yes, millennials will get higher paying jobs and become more successful and climb up that corporate ladder. But along with that comes the higher tax bracket. And so what you were mentioning is, okay, let's be creative. And a lot of millennials are now influencers, bloggers, YouTubers.
All businesses.
All businesses, they work at home.
They're creating apps.
Yeah.
You know, my stepson is a app developer in Silicon Valley. Okay, that's what he does. He moved to San Francisco so that he could develop his app and his business. And he's a millennial, and he's so good at this. I mean, you guys are so naturally good at technology, and you're not afraid of it.
Yeah.
And I love that. And so I think everybody's a natural entrepreneur. I don't think there's entrepreneurs and not entrepreneurs. I think we naturally want to have control over our life. We'd like to have control over our taxes. I mean, wouldn't it be nice to be able to say, I get to choose how much tax I pay? Well, the reality is you do get to choose how much tax you pay. Because, I mean, the reason I wrote the book Tax-Free Wealth is it's tax-free wealth. It's not like less tax wealth. It's tax-free wealth. And there's a lot of people, we have a lot of clients that pay zero taxes legally. Well, because you choose. If you do what the government wants done, you pay less tax. But if you're an employee, as Robert Kiyosaki likes to say, you know, you're a tax mule, right? Because you basically are working, you're a partner with the government, and 30-40% of your money, sometimes 50-60%, right? Especially if you're in California, right? We call it taxifornia, right? If you're in California or New York or someplace like that, you're paying up to 50, 60, you can even pay 70% in taxes. Well, why would you do that if you had a choice? Well, you do have a choice. Because here's the thing, what most people don't know is that the tax law is very fair. Anybody gets the same breaks, regardless whether they're doing a big business or a small business. Business gets tax breaks. You can be a big business like Warren Buffett's business, or you can be a small business that you start out of your home. Guess what? Same tax breaks, same opportunities. It's really about financial education, and this is what they don't teach in school. And remember, it's not just about taxes. It's about debt. Okay, Ken McElroy, my friend Ken McElroy, also a rich dad advisor, he talks a lot about debt and using debt in real estate, using debt in business. Well, the two combine together, because the more debt you have, the more assets you have. So this is the more things you have producing income. Yeah. And the more assets you have, the less tax you pay. So this is kind of a general rule. The more money you make as an employee, the more tax you pay. But the more assets you build and the more debt you have, the less tax you pay. So you just have to choose. What do you want to do?
And that's what I love, because you mentioned clearly how, and you state it, and you put examples of how the government will give you benefits if you're doing what they would like you to do, creating jobs, providing housing. And one thing Robert said once was how a lot of people were upset when they found out Trump didn't pay taxes. But Robert said he'd have to be an idiot to pay taxes. And so I think that's where it comes really important for people to find the resources, if they are influencers or bloggers or whatever millennials may want to be, Ubers, to go to someone professional like you and seek advice, because you know exactly what benefits or what deductions they can ask for.
Well, that is a big key. So we talk a lot among the Rich Dad Advisors about a team, right? We're Robert's team. And having a great team is priceless. I mean, you cannot put a price on that. And so people on your team might include even a bookkeeper. Right? They include certainly a tax professional, a CPA in most cases, somebody who works with you on real estate like Ken McElroy, or somebody who works with you on stock trading like Andy Tanner, right? Having this team together, that's, you want to really know how to make yourself rich, you've got to put that team together. And sitting down with that tax advisor, outside of your spouse or partner, the person who's going to have the biggest influence on your wealth is your tax professional, just because it's such a big part of our money. It's just a big thing. And so we can plan ahead using debt and taxes, or we can just complain when we get a small refund.
And it's like you said, it's about changing your facts. So if you're really upset with how much you see that's being taken out of your paycheck, then let's change our reality, let's change our facts, and let's find ways to be creative. And so, Tom, I have a question for you. Now that we're heading into 2020, what piece of advice, if you could give one little piece of advice to our viewers, what would it be?
Build your team. Yeah. It would absolutely be build your team. Sit down with your tax advisor, sit down with your banker, sit down with your insurance agent. You're going, oh, that's like the least fun in the possible, right? But the reality is that if you have dreams, if you want, you want to do things, you want to, whatever your dream is, it's going to come true because you've got a financial education. And unless you're using debt and taxes the way that's possible, your dream's going to be a long ways out, and you may never be able to see it. I mean, the amount of wealth that's in the hands of millennials is tiny compared at your age compared to what it was when I was, at your age. And so but you have more opportunities than ever. Yeah. And the government will give you that incentive to use debt and taxes to make yourself rich so that you can have your dreams.
Yeah, and thank you, Tom, because honestly, like I mentioned before, I mean, sometimes it can be a boring topic when you think about it, but then once you dive into it with someone like you, I actually get excited about it now, because I'm like, oh my God, I didn't know my rent was a deductible. I didn't know I could find ways to be creative with my car, with my computer, and things like that. So I think once you realize how much money you can receive from all this, it'll be even more exciting because you can spend it on what you truly want, which is... It's
really a fun game. I mean, when it comes down to it, taxes are a game. Money is a game. And, I always say, if you're going to play, everybody's playing the game, you might as well win it.
Yeah. So, Tom, where exactly can someone find a tax professional?
Alex, that's the most often asked question. As I travel the world with Robert and Ken and Andy and Garrett, these other guys, the question I always get is, where do I find somebody like you? Somebody who actually thinks about money thinks about taxes as a series of incentives, right? And I gave up looking. And so what we've done, my company, Wealthability, we've actually created a network of tax advisors who do what we do. And so I'm going to give you the easy button here. You can interview a tax person, and you should have your tax person read Tax-Free Wealth. If you love your tax person, send them to us, and we're happy to train them and teach them how to do it this way. Or just hit the easy button, come to us at wealthability.com. We're happy to help you find the right accountant. We don't charge for it. We charge the accountant, but we're happy to help you. We're absolutely happy to help you find somebody. Or in the book, Tax-Free Wealth, in chapter 23, there's actually an entire chapter on how to find the right tax advisor.
And I think that's really important too, because when I've flown with you guys in the past to these events, I see where people say, you can't do that here, or that's not possible. And so I think it's really important to find someone like you who also does the real thing in real life and knows exactly what can be an incentive. Because when a person doesn't have that mindset and they're still professional, they won't be able to give you the incentives that you talked about.
No, because they don't understand. I mean, if they're not a business owner, if they're not an investor, they're basically what Robert says is a fake teacher.
Yeah.
Right? So you want to have real teachers. I know you ran into that in your accounting professor. You had a fake teacher. So we spent some time because I have the practical experience. So do find that right person. And whether it's, reading chapter 23 of Tax-Free Wealth, coming to us and just asking us for a recommendation, whatever you do, just make sure you get somebody who really understands that taxes are a series of incentives primarily for business owners and investors, and that anybody can reduce their taxes.
And I will be adding the link in the description to your website where they can get the book and everything, because I think it's very important, especially if you're on this journey of entrepreneurship. And so, Tom, you mentioned before how they should read the book. The tax professional should read the book if they haven't. Why do you think it's so important for our viewers to read it?
Well, here's the thing. Just like anything else about money, it's all your perspective, right? Millennial money is all about a different perspective of looking at money. Rich Dad's all about a different perspective of looking at money. The idea of using debt and taxes will make you rich. I mean, who thinks of that? I mean, that's a completely different thought process. The idea of how the tax law works to your benefit, there's only like 30 pages of 6,000 pages of tax law that raise taxes, and the other almost 6,000 pages, 5,900 pages, actually are an instruction guide to reducing taxes. So Tax-Free Wealth is all about making that instruction guide, which is very complex, simple and easy and fun to understand. It's written not for your tax advisors, it's actually written for you. So anybody can read this, anybody can read Tax-Free Wealth, anybody can understand it. You're going to need a tax advisor, though, to help you apply what you've learned. And it's best if you're both on the same page. So it's always best if you've read it and your tax advisor has read it, so that you can talk about this and use common language.
Yeah, and I think it's a perfect guide too, because there's a checklist in it. I mean, there's certain things that you should be asking the tax professional to see if they're right for you or your company. And that's why I really do appreciate the fact that you wrote this book to begin with, because just like you taught me accounting, you made it very simple. 1 + 2 = 3, and then that's it. Not like the 6,000 pages that you would have to read otherwise. So thank you for that, Tom.
Thank you.
So Tom, other than withholdings, what else changed in 2017?
Well, actually, Alex, the tax law fundamentally changed in 2017. We've always had, in the U.S. and most countries, a tax called a net income tax. Okay, it's a tax on income. What happened in 2017 is it fundamentally changed from an income tax to a consumption tax. And let me show you what I mean by that. So if you've ever watched Robert, read Rich Dad Poor Dad, played the cash flow game, you know that his favorite diagram, one of his favorite diagrams, is basically your financial statements. And we have two fundamental financial statements. And we have this financial statement, which is your income statement, right? We have income, expense, and then we have this financial statement down here, which we have assets, and we have liabilities. Now, it's always been the case that if you have money come in, you're going to pay tax, and when it goes out, there's going to be a tax liability there. Okay? And the other thing that has been consistent over the years is that if you take your money and you put it back into your business, there's no tax. Here's what changed in 2017. Because it used to be if you took the money and put it into an asset, you still pay tax on it. But now what happens is, if you make money, this is so cool. If you make money and you buy an asset, whether it's real estate or oil or energy, any clean energy, any kind of real solid asset, equipment, business, all of that, what happens is there's no tax. So basically, the only money you're taxed on is the money is what you consume, what you spend on for your personal purposes. But if you continue to, this is what the rich do, that the rest of the world doesn't understand, is that the way the tax law works is, if you take money and you put it back into your business or you put it into productive assets, you're always going to pay less tax. And so what we always like to say is that if you want to pay less tax, you need to buy more assets.
Yeah.
And it just seems so contrary to everything we thought, because yeah, if you have more income, you pay more tax. That's true. If you have more income, you pay more tax if you use that money. But if you actually reinvest it, you pay no tax. And to me, that's a little piece of magic that happened because of the 2017 tax law.
Yeah, and I think you nailed it, because it is magic. I mean, you're not only growing your business by reinvesting in whether it's technology or your home office, but so you're growing your business while also reducing your taxes. And so that's really incredible. And no one would know that if it wasn't for you or a tax professional on your team.
Well, and that's what Tax-Free Wealth teaches, is that it's all about making more money and paying less tax.
So if you're like me and you're sick and tired of paying taxes, then start investing in your financial education. Pick up a book like this, subscribe to our channel, and hit that notification bell. I'll see you guys next time.